5 trades on gold, 4 hit target, 1 hit my stop loss, and that losing trade is the one to watch. My stop got hit, then price reversed and went straight to my target. I still did not move my stop. I will show you why. Quick note: this is education, not financial advice. Gold moves fast and most traders lose money. Demo first. This is a pullback strategy for gold on the 5-minute chart. Price has to already be falling, and it has to be below the 50 moving average. When that is true, I wait for price to climb back up into a level it already broke, and I sell it. Sell the bounce inside a downtrend. In an uptrend, it mirrors. Price above the 50 moving average, wait for the dip into a broken resistance, and buy. Everything you are about to see is a sell. Gold fell all day, so no buy setup appeared. I will still teach you both sides. 3 things on my chart. The 50 moving average, the white line. It tells me which side I'm allowed to trade. My support and resistance zone indicator. It marks and labels levels automatically, including broken support turned new resistance. And my candle timer, so I know how many seconds are left before a candle closes. All 3 are free. Template 2. Links in the description. One clear note: the red and green risk boxes are my long-short position tool. That one is paid on amcourses.com. You do not need it. You can measure risk and reward manually. 4 conditions before I sell. 1. Clear downtrend. Lower highs, lower lows. 2. Price below the 50 moving average. 3. Price pulls back up into a resistance level or the moving average. Most people sell as soon as price falls. I wait for the bounce. 4. 1 or 2 bearish candles rejecting the level. Not a wick, a close. Stop above the level. Target at the next verified support below. If one condition is missing, I do nothing. For buys, flip all 4. Uptrend, price above the moving average, pull back down into support, bullish confirmation. Stop below, target at the next resistance above. When price breaks above a resistance and comes back to it, that old resistance becomes new support. My indicator labels it broken R, new support. That is where I buy. Look at the left of this chart first. Gold fell all session. Lower high after lower high, moving average sloping down the whole way. Then price bounced and climbed back above the moving average. Most traders see that and think the downtrend is over. I do not. Until price makes a higher high, a rally inside a downtrend is just a pullback waiting to fail. This is the level that matters. Broken resistance, now acting as support. While price holds above it, the pullback is alive. Break below it and the pullback is finished. And that is exactly what happens. Big bearish candles cut back through the moving average, then through the level, and close below it. Not a wick underneath, a close underneath. That is my confirmation. I sell here, right after the candle closes below the level. Stop goes above both the broken level and the moving average. If price reclaims both of those, I am wrong, and I want out. Target sits at the low this pullback started from. Price has already reacted there once, so that is where I take my money. Risk to reward here is just over 1-to-1. Small, but I will not stretch a target past a real level just to make the ratio look better. Now the boring part. Order is in, stop is set, target is set. I am not touching either one. Price steps down straight away. No fight, no climb back to test me, and watch the level. My indicator flips it again. Broken support, new resistance. Same line, opposite job. Price failing to reclaim it tells me the pullback is done. Target hit. Under an hour. And look, price kept falling well past my target. That will happen on almost every trade in this video. I leave money on the table every time, and that is fine. I take the piece between 2 levels I can actually see. Trying to catch the whole move is how winners turn into losers. 1 down. The second trade came from this same area, and it was even faster. Second trade, same level as the first one. After my first target was hit, Price did not just keep falling, it came back up, all the way back to the level I had traded off a few hours earlier. My indicator still has this marked as broken resistance turned support, but price is now below it. So for me, it is doing the opposite job. It is a ceiling now. This is what traders call a retest. Price breaks a level, drops away, then comes back to touch it from the other side. And look at what is waiting there. The moving average has curved down and is sitting right at that same level. Level and moving average in the same spot. That is the setup I want most. Price pushes up into it, and it cannot get through. You can see the wicks poking above and getting sold straight back down. Then a bearish close. That is my confirmation. I sell. Stop goes just above the level. And notice how tight it is compared to the first trade. Because this time, price came to the level and got rejected, instead of me chasing a breakdown. Target down at the low from earlier in the session. Risk to reward, about 1.5 to 1. Better than the first trade, and the only thing that changed was patience. I let price come to me. Order in, stop set, target set, hands off. Price does not hesitate here. It drops away from the level immediately and does not come back to test my stop even once, and the indicator flips the level again as price stays below it. Broken support, new resistance. Target hit. That one took about 13 minutes. And again, price carried on well past my target. 2 trades now, both from the same level, both with the same result. That is the thing about levels. They do not stop mattering after one trade. If price keeps coming back and keeps getting rejected, that level is still valid. Third trade moved to a completely new area of the chart. Third trade. And this one is in a completely new area of the chart. After my second target, price kept dropping. It broke through the old low and made a fresh low down here. The whole structure has moved lower. Then it pulled back up again. Same story as before. A bounce inside a downtrend. But look carefully at this one. There is no support or resistance level here at all. My indicator has not marked anything at this price. The only thing price is pulling back into is the moving average. And that is allowed. Remember the rule. Price has to pull back into a resistance level or the moving average. Either one works. The moving average is falling steeply here, and price has climbed right up underneath it. Price touches it, gets pushed back, and closes bearish. That is my confirmation. I sell. Stop goes above the moving average with room. If price closes back above it and holds, this pullback was not a pullback, and I want out. Target down at the verified support from the earlier low. That level has already held price once, so that is where I take my money. Risk to reward, 1.5 to 1. Order in. Nothing to do. Price rolls over and starts stepping down, but this one takes its time, almost 2 hours. And on the way down, my indicator drops a new level in here. Weak resistance. Price bumps into it from below and gets rejected again. That is a small piece of confirmation while the trade is running. It tells me sellers are still in control. It does not change anything I do. Stop stays, target stays. But it is good to see. Target hit at the verified support, and straight after, price broke through that support and dropped again. 3 trades, 3 targets. And I want to be honest about what you are watching. This was a very clean, trending day. Gold went one direction and barely argued about it. That is not every day. The 4th trade is where this session gets uncomfortable. 4th trade. And on paper, this was the best setup of the entire session. Price had broken below this level, dropped away from it, and now it was climbing back up to touch it from underneath. A retest, exactly like the second trade. Price reaches the level, stalls, and gives me a bearish close. Confirmation is there. I sell at the level. Stop above, up here at the weak resistance line. Target all the way down at the untested support below. Risk to reward 2 to 1. The best ratio of the whole day. Twice as much to win as to lose. Everything about this looked right. But look at one thing with me, because I did not weight it heavily enough at the time. The moving average is up here. My entry is down here. There is a real gap between them. In the second and third trades, price climbed all the way up to the moving average and got rejected there. That is what killed those pullbacks. Here, price only came back to the level. The moving average had not been tested at all. Hold that thought. Now watch what happens. This is the longest trade of the session by far. Hours, not minutes. Price does not drop. It grinds upward. Slowly, candle by candle, it reaches the moving average and goes straight through it, closes above it, and stays above it. That was my signal that the setup had failed. The condition that let me sell in the first place was gone. And look at what my indicator does. That level I sold at, it relabels it as verified support. Price is holding above it now, so it flipped rolls again, this time against me. Price keeps climbing, reaches my stop, and takes me out. That is the loss. And I want to be clear. I did not touch the stop while any of this was happening. Not once. Now here is the part that stings. Almost immediately after my stop was hit, price turned around and fell hard, straight through where my target was sitting and well below it. A wider stop, and this was my biggest winner of the day. So should I widen my stop next time? No. My stop sat above the level and above the moving average. That placement is what gave me 2-to-1. Push it further out and that ratio collapses. Now I need to win far more often just to break even, and on every trade where price does not come back, I lose double. Widening a stop feels like patience. It is not. It is refusing to be wrong. And the stop was never the problem. The entry was. Price had not been rejected at the moving average, only at the level. The pullback was not finished and it used the room it had left. That is what I would change. Not a wider stop, a better entry. 1 loss out of 5. That is the strategy working normally, not the strategy breaking. And the 5th trade came a few hours later. 5th trade, a few hours after the loss. Look what price did in between. It collapsed. From up here all the way down to a new low, a much bigger move than anything earlier in the session. Then the same thing happens again. Price bounces and climbs back up. And this is exactly what was missing in the trade I just lost. Price does not stop halfway. It climbs all the way up to the moving average. My indicator has also dropped a fresh verified resistance right at the same spot. Level and moving average together with price rejected at both. That is the confirmation I want. I sell. Stop above the moving average. Target down at the verified support. The low price just came from. Risk to reward here is only about 1-to-1. The smallest of the day. I still take it. The setup is valid, and I do not skip valid setups because the reward looks small. That is how you end up only taking the trades that feel exciting, which are usually the worst ones. Order in. Stop set. Nothing to do. Price hesitates around the entry for a while, then rolls over and starts working down toward the target. The moving average stays above price the whole time. That is what I want to see. The pullback never got a second chance. Target hit at the verified support. Session done. That was the last trade I took. 5 trades, 4 winners, 1 loss. All of them sells. And I want to be straight with you about what you just watched. This was one session, on one pair, on a day where gold fell almost the entire time. Every single setup was a sell because there were no buy setups. The market never gave one. This is not proof that the strategy wins 80% of the time. On a sideways day, most of these setups would never have formed at all, and the ones that did would have looked much worse. What this does show you is what the setup looks like when conditions are right, and what to do when one of them fails. If you take one thing from this video, take this. The trade I lost and the trade right after, it had the same idea behind them. The difference was where price came back to. On the loser, price only reached the level. On the winner, price reached the level and the moving average together. That is the whole edge, not the indicator, not the settings, just waiting for the pullback to actually finish. Everything on my chart is in the description. The moving average settings, my support and resistance zone indicator, my candle timer, and the template, all free. The only paid item is the position tool I used for the risk boxes, and you do not need it. If this was useful, subscribe. I post real trades, including the ones that lose. See you in the next one.